What's up, everyone? It's Scotty with Moneyvest. So NASDAQ here continues to sell off, down a little bit over 2% on the day, with the S&P 500 down almost 1.4%, and the Dow Jones still manages to eke out a gain of up over 0.5% on the day here, as the sell-off in technology stocks continues. And if anything, it's only really getting started. I did a video on this very concept and this topic earlier in the day, so make sure that you do check out that video as well. So this right here was the entire market, with the Dow Jones pushing past 41,198 for the first time ever. S&P 500 just shy of 5,600, and the NASDAQ trading now below 18,000, dropping over 2.77% on the day, and with a very targeted sell-off. Of course, Nvidia down over 6.6%. Eli Lilly down over 3.8%, Amazon down 2.5%, Tesla's down over 3%, Google, Meta also selling off quite aggressively, with the Meta down over 5.6%, Apple down 2.5%, Microsoft 1.33%, and the entire semiconductor and chip stocks were selling off on the back of ASML's earnings, which was also down over 10%. And as a result of that, SMH, which is the semiconductor ETF, was also selling off quite aggressively. So if you come over to our trading view, so SMH was down a little bit over 6% on the day. As you can see, this brutal sell-off on the day, down over 7% actually by the time it ended up closing, down to $254 a share. And if you come over to our semiconductor stocks, so semis, you'll notice a complete bloodbath across the board, with ASML down over 12%, Applied Materials, that kind of belongs in a very similar category as ASML, down over 10.5%, AMD down over 10.2%, Lam Research down 10%, Qualcomm down 8.6%. So we did see a lot of softening and a lot of selling pressure in the semiconductor sector, which obviously resulted in the overall selling pressure for technology. Giving you guys a bit of a portfolio update. So I'm down over $14,684 on the day today as a part of this huge sell-off in technology. Of course, if your portfolio is a little bit more Dow Jones heavy or value stocks heavy, then I'm sure you're not feeling as much pain as us, who are mostly invested in technology with some exposure in other parts of the market as well. But this is just to keep things transparent and just to give you a bit of an idea that this is how the markets operate. Not every day is going to be green. I've been giving you guys a bit of a portfolio update on the daily gain, daily losses over the last week here. And just again, to put things in perspective here, I remember a point in my life when my entire portfolio value was about $10,000, right? So let alone having those fluctuations on a daily basis of $14, $15, $20, $25, $30,000, my entire portfolio value was close to $10,000. So it just goes to show that you have to build your way up as you progress in your investing career. Some people are dealing with $30,000 to $50,000 in daily fluctuations. I know some people are dealing with $100,000 in daily fluctuations for their portfolios, and then there are folks that are dealing with $1 million worth of just fluctuations, of daily changes up or down in a single day because of how large their portfolios are. So it's all a game of leveling up over the years, over time, and sticking to the process and being disciplined enough to take advantage of when the markets are giving you opportunities. And we're going to find better and better opportunities over time. So it's just one of the biggest things about the market really is to stay in the game. And that comes with capital preservation. A lot of people want to take on too much risk. A lot of people focus on making too much profit, where they forget about the risk, they forget about the downside, they forget about how dirty and how nasty the markets can eventually become over time. And if you've been doing it long enough, you understand, you got the wisdom to know that it's not always sunshine and rainbows, and you are going to have painful days which are going to be hard for you to swallow, like today when it's down almost $15,000 for me. But at the same time, it is something that I've gotten used to now. Of course, if this number was, if you move this decimal point one more to the right, if this was $146,000, yes, I would be pretty much not doing super well. I would be dreading that loss. But at the same time, it's really just kind of over here. It's really coming down to your mentality and how you're leveling up over the years to see those bigger and bigger numbers. I know some people that don't even want to look at their portfolios when markets are down. That's okay too. But how long is that going to go on for, right? At some point, you've got to be comfortable looking at your gains and your losses And just understand that it's been a long journey. It's taken a lot of time for you to get to where you are, and it's only a bump in the road, right? You're only moving to higher and higher levels as you continue to stay disciplined with your process of investing in the markets, and it's going to give you days like today. So moving forward, this right here was the decliners versus advancers. So we did have over 3,300 stocks that were declining on the day, with advancing over 2,300. So we did have more stocks advancing on the day as opposed to the ones that were going down. But because it was a type of stocks that were selling off, which was mostly technology and some of the larger cap big tech stocks, we did have, of course, the markets, more specifically NASDAQ and the S&P 500 sell off. So this was the entire market. Very, very small pockets within the market with respect to consumer defensives, energy, real estate that were pushing higher, financials that were pushing higher. Everything else was selling off quite aggressively, more specifically technology and, of course, your NASDAQ stocks. So Apple, Nvidia lead big tech's $500 billion slump as NASDAQ limps to worst day since 2022. So large technology stocks failed Wednesday as the tech-heavy NASDAQ Composite Index paced towards the worst day since December of 2022, highlighting last week's shifting market regime as lower interest rates appear on deck and investors view a Trump presidency as increasingly likely as well. And the NASDAQ fell 2.8% by market close, a wider loss than the S&P 500's 1.4%, so twice as much as the S&P 500's sell-off, and a decline in the Dow Jones Industrials gaining of 0.6%, sinking to its lowest level since July 1st for the NASDAQ at sub 18,000. And all of the Magnificent 7 mega cap tech stocks is in Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla declined by more than 1%, shedding more than $500 billion in aggregated market value. Not to mention semiconductor stocks obviously selling off even more than 1%, closer to 7, 8, 9, 10%. It's a renaissance for a long forsaken small caps. The Russell 2000 tallied its best 5-day stretch relative to the S&P 500 ever from last Wednesday to Tuesday, according to Charles Schwab strategist Kevin Gordon. The Russell 2000, which of course tracks 2,000 public American companies with a median market cap of about $1 trillion, actually $1 billion, not a trillion, $1 billion. Again, it's a very, very small cap index, is up 11% year to date and actually was flat up until last Wednesday. So just in 1 week, IWM or Russell 2000 has rallied over 11% on the year. Of course, coming in very close with the gains of S&P 500 and the NASDAQ ever since we've seen this brutal sell-off. So it's a very, very clear rotation out of technology over to other parts of the market. As you'll notice, technology and comm services selling off quite aggressively, and those are the two sectors that are down over 4% in the last 1 week. So almost 5% sell-off in the last 1 week. In the last 1 month, though, they're all up. All 11 sectors are doing well. But this right here, of course, suggesting for a pretty brutal sell-off and a significant rotation out of technology over to other parts of the market. Now, as I mentioned before, and before we get further here, I do want to mention that we've got our very own Moneyvest platform. We're going to be adding our earnings calendar onto this platform as well, so you can take a look at what companies are reporting when, what is the revenue and EPS expectations with the year-over-year increase or decrease. And this right here is a 51% discount that's available until the end of this month, so you can access this entire platform, do your full fundamental analysis. We're also going to be adding your portfolio dashboard for you in one of our future updates, and we've also added 430 REITs, so now you can actually go to whatever REIT you want to. Let's look at Realty Income Corporation. So now you can actually analyze 430 real estate investment trusts on our platform, do your full comprehensive fundamental analysis for whatever data points you want to plot on the chart and look at it from a fundamental analysis standpoint, as well as, of course, looking at analyst estimates all the way up to calculating your fair values using our financial models and calculators as well. And again, we're going to be adding a lot more stuff, a lot more features and tools for all of you. So link's going to be down below. We'd love to have you on board. And if you have any questions, feel free to reach out. And like I said, limited spots left with a 51% discount that expires at the end of this month. And you also do get access to our Discord with all the buy and sell alerts, options alerts, and trade ideas as well. So if you take a look at the Magnificent 7 over here, almost all of them are expected to increase except for Tesla. Tesla is expected to decline both revenue and EPS anywhere from 3.5% to as much as 33.5%. The largest increase is going to happen in Nvidia at 111% revenue increase and over 136% increase in earnings per share, with Amazon and Google also coming in with very strong increases in earnings per share, as well as Meta at well over 50% to as much as 27%. Now, when it comes to the median move or the stock price, NVIDIA is kind of positioned the best because it's got a probability of 75%, which is one of the highest, if not the highest, comparable to Apple. But the median and the average move is significantly higher. No stock comes even close to NVIDIA in terms of its post-earnings stock performance at over 8% on average move to the upside, and on a median move of almost 6.5% to the upside as well. Apple has a similar win rate, and this is going back as far as last 8 quarters or the last 2 years that we're looking at. 75% in stock performance, probability that it's going to move higher, but the average and the median move is really, really low. So NVIDIA being as crazy as it is in terms of valuation, still over the last 8 quarters, and again, I want to be very clear that NVIDIA's valuation over the last 2 years has increased significantly, disproportionately to Apple. And for that reason, that 8%, 6%, that volatility is going to come down as the market size grows, because the company is now worth over $3.5, $3.6 trillion. And so moving 8% just on earnings is a lot of liquidity. We're talking $300 billion in market cap. Though possible, very much unlikely. It is still possible. I'm still going to mention that it's still possible that it could happen. But it's just that as stock prices get higher and higher, in other words, the market cap increases, the volatility is going to come down, because it's not easy to flush $400 billion out of a stock. It's not easy to pump $400 billion into a stock. So that's going to make things a lot more difficult. So that volatility is over the last 8 quarters, when NVIDIA's value was, of course, significantly lower, and it was more sort of susceptible to a lot of volatility post earnings. So that's something to keep in mind. But this is where we are. This is a quick table that's showing you Magnificent 7 revenue, EPS growth expectations, and the beat probability as well for revenue and EPS. So every stock is expected to beat expectations, except for Tesla, which is 1.5% miss, is expected from their earnings next week. And this is again based on the data from last 8 quarters for Magnificent 7. Now coming over to the analysis here, so lumber prices, oat prices, live cattle pushing higher, with orange juice, ethanol, and sugar prices coming down. Bitcoin just shy of 65,000, Ether just a little bit over 3,400. And this right here is Federal Governor Waller, Christopher Waller, sees the central bank getting closer to an interest rate cut. So what he essentially mentioned during his testimony and his speech is suggesting that interest rate cuts are ahead soon, as long as there are no major surprises on inflation and on employment. I believe the current data are consistent with achieving a soft landing, and I will be looking for data over the next couple months to buttress this view. Waller said in remarks for a program at Kansas City Fed, so while I don't believe we have reached our final destination, I do believe that we are getting closer to the time when a cut in the policy rate is warranted. And keeping with statements from other policymakers, he again sort of reiterated that the unlikelihood of a rate cut when the FOMC meets later this month, but a stronger likelihood for a move in September. Waller also outlined 3 potential scenarios in the days ahead, one in which the inflation data runs even more positive and justifies a rate cut in the not too distant future, a second in which data fluctuates but still points towards moderation, and a third in which inflation turns higher and forces the Fed into a tighter monetary policy stance. And he says, and I quote, "Given that I believe the first 2 scenarios have the highest probability of occurring, I believe the time to lower the policy rate is drawing closer." Assuming there's not a big shock to the economy, from a macro perspective, it doesn't really matter much. It's not a particular meeting. It's when we think the conditions are right to go. So once again, another Fed member sort of reiterating that rate cuts are on the horizon. They are more likely than ever that are going to happen. We're going to potentially come down from the high 5.25% and 5.5% down to some more stable, more moderated levels. I'll talk more about that later in the video. But Grant Cardone. Now, if a lot of news medias are reaching out to Grant Cardone for a lot of advice on the stock market, we are definitely running short of people that can give a sound and reasonable expectation and analysis on the market. And he's expecting a devastating 50% pullback for Americans' retirement accounts. And what's his advice is to take his money out, invest with him in real estate. So I think this was a very, very simple pass in the analysis that I was able to do, and of course reading what kind of analysis he's come up to. Like the thing is that the main analysis he was able to come up to was the yield curve inversion, which we already know for the last 18 to 20 months has already been happening. And he's expecting a recession and, of course, a market coming down, which every other person is expecting. Now, coming over to the markets, S&P 500, the NASDAQ, of course, starting to roll over a little bit. Quick take on IWM, down about 1%. So Russell 2000 definitely did sell off a little bit, but again, compared to the S&P, compared to the NASDAQ, not as much. And even if you do come over to the Dow Jones, I mean, for the most part, I believe it did see a bit of a decline, and it was just really a certain few stocks that were pushing higher, especially UNH, which is priced highest in the Dow Jones index at $573. And because of UNH, the Dow Jones eked out a gain because it's a price-weighted index. It's not a market cap-weighted index because Apple is part of it, Microsoft is part of it, JP Morgan is part of it. So if it was a market cap-weighted index, this would have been down because of the fact that Apple's down 2.4. Microsoft was also down quite considerably of over 1.3%. But because it's a price-weighted index and UNH, believe it or not, actually has a more influence in the Dow Jones as opposed to Apple, and it was up over 4.5%, it definitely did push higher on the day. Then we also had Home Depot, Amgen, Visa, McDonald's, all of them pushing up over 1.5%, and they have a much bigger influence on the Dow Jones as opposed to Apple, which was down over 2.5%. So definitely a lot of momentum. And of course, we did have a lot of other value stocks like Nike, Walmart, Coca-Cola. Then we also had Dow Incorporated, Cisco, Verizon, Intel, Walgreens, all of them pushing higher on the day, and of course, resulting in the Dow Jones to push higher. Now, because there's a potential for rate cuts, as federal Governor Christopher Waller said, Chairman Jerome Powell has also mentioned that IWM and some of the more value-oriented stocks and small caps are susceptible to doing much better because of the fact that higher interest rates, in other words, were not really a net positive or a net negative for big tech companies, and they just happen to be more resilient during those times. And because of those rate cuts, it's just a better opportunity. It's not saying that big tech is done, it's a done trade, and it's just going to keep selling off. It's just that other parts of the market, since they were ignored and they were neglected, they're just better opportunities for the time being. And I think that's something that we have to understand about the market. Now, coming over to our Moneyvest index, we are now down to 4.02. I did a manual calculation of where we were and mentioned this in our Discord. We were closer to 4 for the Moneyvest index. And of course, if this number continues to come down, and I'm hoping for it to come down to 3.5, 3, or even lower, sub 3, because that's really where the opportunity is going to be. It's one of the best indexes, best indicators, in my opinion, with a very, very high success rate. We've back tested this, over the years, and it's done really well. It's given us very nice, clear buying opportunities where the risk reward is most favorable for the market. So eventually, this is also going to make its way over to the Moneyvest platform, and you'll be able to see a macro dashboard with the earnings calendar, economic calendar, the Moneyvest index, the S&P 500's fundamental, technical positioning. Everything is going to be available with volatility analysis, a lot of really amazing stuff on the platform as you can access over there. So again, link's going to be down below if you want to join, and we'd love to have you on board. When it comes to volatility, so we did see a spike of over 9.6%. That's also one of the reasons why the Moneyvest index is coming down. So 14.5 is where we are. Next level is going to be closer to 15 to as much as 18 to 20 levels for the VIX moving forward. Talking about S&P 500 here, so next support really is going to be 54.37, 54.40 for the S&P. And again, we're starting to roll over a little bit with the RSI coming down, MACD coming down. And I really just need you guys to relax. This is part of the market. This is part of market cycles. This has happened over and over again. Nothing to be scared of, nothing to be feeling stress over or anxiety over, because this is very normal. This is something that happens over and over again as we have analyzed the markets, as we understood how the market dynamics work. It's a pendulum that swings from being overbought to oversold to overvalued to undervalued to expensive to cheap to euphoria to fear to greed to fear, and it just keeps on swinging back and forth. And we obviously did get a bit more to the overextended side, and right now we're just kind of readjusting and resetting market expectations at the moment. So moving over to the NASDAQ, so IXIC, we're starting to see a pretty decent, bigger sell-off here, down over 2.7% under 18,000. So it doesn't come as a surprise. as we were talking about some lower highs and lower lows and a little bit of a downtrend for the NASDAQ. And the next support, of course, is going to be sitting put at 17,941. And the NASDAQ is already down, I think, over 4% from its all-time highs, a little bit over 3.6% from its all-time highs. And this right here is going to be that support level to watch at around 17,950. So in and around those levels are going to be the ones to watch. Talking about Apple, and Apple here rolling over down about 2.5%. So that again is going to be very, very normal, something that we are used to seeing. Again, RSI was overbought, MACD was overbought. The L3 banker oscillator was also at an all-time record here, pushing up to over 93, 97. So it's not a surprise that we're starting to see a bit of a reset and some profit taking and some pullbacks for Apple. Support level is going to stay put down to $218 to as low as $206 per share for Apple. Talking about Amazon, and Amazon here also starting to roll over and coming down. Resistance going to stay put at $200 as we have discussed, and starting to break down below this support of $188, $189 for Amazon, all the way down to $171 for Amazon as well. So that right there is going to be that next support level to watch for Amazon. Talking about Tesla, and Tesla also struggling a little bit. It still did manage to close green yesterday, but down over 3% today, breaking down below 250s. That continues to remain a very strong resistance in the 260s here for Tesla. As you'll notice that we have gotten rejected in the past in and around those levels. So I would really just argue that this entire area is a huge area of supply for Tesla, because we continue to get rejected here. That's been the lower high time and time again for Tesla. And as a result, support level is going to stay put down to $235 next for this company. So that's going to be that next support and target. Resistance and supply is going to stay put in the 260s for now for Tesla. Nvidia with a pretty decent sell-off, down a little bit over 6.6%, starting to break down below $118. And from its all-time highs of 140, the stock's down over 16%, another 4%, and be considered in a bit of a bear market. And next support, unfortunately, is going to be sitting all the way down to $96, $95, all the way down here for Nvidia, because that's kind of aligned with that previous resistance. And we do also have a few gaps that Nvidia left out before, of course, pushing higher. So those are some of the gaps that may or may not come back down to fill in. But Nvidia has also been known for again, getting bought up fairly quickly after some reasonable pullbacks. And if we do bring up some of the moving averages for Nvidia, it's coming up to its 100 simple moving average, which is going to be that green line you see on the chart. Actually, that's the 50 SMA that it's coming down to now at the moment. Talking about advanced micro devices, and AMD also getting absolutely sold off with a interesting and crazy candle, no wicks, only a straight up body from high to low and down over 10%. Next support down to that 200 simple moving average, sitting roughly at 151 for advanced micro devices. PayPal on the other day here just basically flat, down about 92 basis points. Support level is going to stay put at $57. We're still seeing some momentum on the RSI and on the MACD as well. Resistance and target's going to be all the way up to as much as $65 for PayPal. Talking about Visa, and Visa here pushing higher very, very well. So one of the outperformers on the day, up over 1.2%. Support level is going to stay put at 266 all the way up to a resistance of $282 a share for Visa as well. And then, of course, finally we come over to Meta Platforms, and Meta here on the day aggressively selling off back down to that support and that area of support and that area of demand between 450 and 475. And this right here will go ahead and turn this level into a resistance for Tesla once again. So that is going to be that resistance and that area of supply. And support level, of course, is going to stay put right over here at around 455 for Meta. Talking about Netflix, and Netflix is also reporting earnings, I believe, tomorrow. So tomorrow we've got the earnings on Thursday after the market's close. One of the first FANG stocks to report earnings. Support level is going to stay put at 636. It's most likely going to be affecting how companies like Meta and Google do because of that advertising sort of overlap, and then also streaming companies like Disney, Spotify to some extent. You could argue Prime for Amazon to some extent are going to also react to how Netflix does in their own earnings. So there's a few overlaps for other big tech companies, and we'll get a bit of an idea of how we're positioned with the earnings season that's coming up for these companies, for the entire S&P 500, of course, for the entire market as well. So support level at 636, all the way up to that resistance of $702 for Netflix, coming over to Google, starting to roll over as well, something that we have discussed in our previous videos. RSI, MACD, all of them starting to show some signs of weakness. 50 SMA and that support sitting at $179, $180 for Google. Coming over to Microsoft, also rolling over. Support level is going to stay put at 432 for Microsoft moving forward. And of course, resistance all the way up to 468. RSI, MACD, and the L3 banker oscillator, all of them are coming down to very nice, reasonable levels, and which is a good thing. This is always a good thing, which is we are seeing a bit of a reset. Markets giving us the opportunity to buy more shares for these companies. And talking a little bit about Costco and Enphase, and Costco here consolidating sideways. So really it's been quite an interesting chart where the support level stays put at $838, and the next support is going to be all the way down to $781 for Costco, and a very significant negative divergence. As you can see, the higher highs over here for the price action itself, obviously going higher than it did the previous time, and the RSI making lower highs over here. So there is a very severe negative divergence and a lot of institutions and of course whales exiting the stock as well. Finally, we come over to Enphase, and Enphase here really struggling back and forth, but still quite at a support here in the low 100s as it continues to validate that level very nicely. Resistance and targets back up to 138. That's kind of like a triple top for Enphase, and support level, like I said, it's going to stay put in the low 100s for this company. So hope you all enjoyed this video and a complete update on the markets here. Again, link's going to be down below for our entire Moneyvest platform with a 51% discount that's available until the end of this month. You can access all of the platform features and just assure yourself that there will not be any price increases for you as we keep on adding more data. And again, do full fundamental analysis on individual stocks. Look at our macro dashboard. It's going to be available very soon. So links going to be down below along with our Discord channel and our trade alerts as well. So as always, happy investing. I'll see you all in the next video.